believe we could get a roll call and
Alderman Bob Bauman,
here.
Mr. Mark Flaherty, Mr. James Cantor,
Here.
Mr. Scott Mansky,
Here.
Mr. Greg Marcus, Ms. Aichasawa.
Here.
We have a quorum.
Thanks. First order of business in the Finance and Personnel Committee meeting is any discussion and the approval of the meeting minutes from our last meeting, which was January 13th of 2022. Any discussion? All right, I would seek a motion for approval. So moved. Do we have a second?
Second.
Great. All in favor of approval of the meeting minutes, say aye.
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 Any opposed? Great. On to Steve Marsh, our CFO, and our financial report and update.
Thank you, Mr. Chairman, and good morning, everyone. Today is a finance-heavy meeting, which includes Baker Tilly's presentation of the 2021 audit report. We'll also review the year-to-date 22 financials and discuss the forecast for the remainder of the year. But first, a few updates. Number one, on April 29th, a memo was distributed to both the Finance and Governance Committees, informing them that the district filed a voluntary EMA notice as a result of the trustee improperly transferring funds from one trust account to another. As mentioned in the memo, no funds ever left the trust, and the error has since been corrected. The district has received no feedback from the markets or bondholders as a result of this filing. No further action is required by management or the trustee. And number two, as part of your packet today, you'll find a draft resolution, which I think is page 6, that management proposes to introduce at the next board meeting, next Friday, regarding authorized check signers within the organization. The last time the board passed a check signing resolution was in September of 2018, and a copy of that resolution is page 7 of your packet. Management is simply seeking to replace, as an authorized check signer, the VP of Sports and Entertainment, which is a position that has since been eliminated at the district, and replace it with the position of Vice President and General Manager. Certainly, if there's any questions or suggested edits, either during this meeting or prior to next week's board meeting, please let me or Marty know so we can incorporate that into the final draft. There's no official action required by this committee today. It's just sort of an advanced preview of what we expect to share with the board next week. Okay, so let's move on to 2022, and I'll try to keep this tight today to allow Wendy Younger from Baker Tilly enough time for her audit report. If you could turn to page 8 of your committee packet, which is the income statement with column IDs A, B, C, and D at the top, you'll see a comparison of the district's year-to-date actuals through March to the year-to-date budget through March. Scrolling down to line 71, column C, you'll notice net income is better than budget by about $250,000. You'll see line 29, column C, net operating income is down from budget. Some of this is a timing issue where we're seeing some events that were budgeted to occur in the first quarter get pushed back to later in the calendar year. We're also seeing the impact of rising operating costs. That's certainly evident in line 18, utilities, which is up almost 12% through March. It's also very present in line number 4, food and beverage revenue, although perhaps less noticeable. You can see we're down $95,000 in this category, approximately 15% through first quarter. Gross sales beat our budget number by about 10%, but Levy is continuing to see increasing pricing pressure on labor and cost of goods sold. We're continuing to work with Levy along with other third-party vendors to control costs and minimize the reduction in profit margins. Moving down to tax revenues, line 35, you'll see through March we're better than budget by about $700,000 or 12%. The March numbers that are part of this schedule are an estimate, and we're hoping to have actual results sometime next week that we can share with the board. But for both January and February, we exceeded budget by about 12%. Bucks District ticket surcharge revenue, line 39, is up relative to budget. Hosting the NCAA tournament in March with UW as a team at that site really helped drive that number up, as well as strong family programming in February with the Disney on Ice events. Moving down to non-operating expenses, a lot of puts and takes in these categories, as is typical this time of year. Note that the Visit Milwaukee expense, line 50, is up about $250K relative to budget. Remember, visits 22 expenses driven largely by 21 tax revenues. When we set the budget for this expense category in September of 21, we were still cautious on where the 22 tax revenues would end. As this board is, or as this committee is aware, the fourth quarter blew our projections out of the water, which caused a subsequent increase in the payment due Visit Milwaukee. The next page of your packet, page 9, is a comparison of our annual budget to our annual forecast. And again, scrolling down to line 71, column C, you see we expect to beat our budget by about $570K. Again, going back up to line 29, the net operating income, we are expecting to close the year-to-date variance from a negative $652K through March to a negative $192K by year end. Part of this is driven by forecasted projections for the Beyond Monet event, which was unbudgeted and is occurring in our exhibit hall beginning in October. We've also included in our forecast a $500,000 grant that the district received in April through the SBA's SVOG grant program, which is part of line 13 other income. This was a supplemental award that the district was eligible for and was in addition to the monies the district received through that same program last fiscal year. As for tax revenues, line 35, we're forecasting only a slight increase relative to budget, 3% for the remainder of the year. That could be a bit conservative, but we believe that's the prudent approach right now. Non-operating expenses, again, the Visit Milwaukee expense variance, line 50, that will continue to grow each month relative to budget. And again, this is just a true up to the 21 tax revenue numbers relative to what we had budgeted back in September. There's certainly some opportunity as we go throughout the year here in this forecast in a number of areas, including our event programming, and as we look to contain costs. And there's risk as well, as there always is this time of year. And management will continue to monitor and adapt its plan going forward. As for our cash exhibits, which are pages 11 and 12 of your packet, the restricted and unrestricted cash positions both remain in a relatively healthy state, and management has no concerns about its ability to meet its continuing debt or operational obligations over the next 12 months. That was certainly a quick run through, Mr. Chairman, but that is my
I ask a question regarding the Visit Milwaukee management fee.
Yes, Scott.
So I'm noticing on page 10, the 2021 annual actual was 3.3 million, and the projection is 6.3 million for 2022. Is the fee, I'm trying to remember if the fee is based upon the activity, or is it of the current cycle 2022, or if it is based upon what occurred in the past?
It's principally based on prior years, Scott. So the 21 payment was based on 20 activity when tax revenues we collected were at an all-time low. The 22 number is based on 21 activity where we saw a significant recovery in that category. That's why there's such a big delta there year over year.
So it becomes an expense of 22 then?
That's right.
And Scott, that also explains the variance that we're showing for 22, because the tax revenue collected in November and December far exceeded our forecast, so that when we were doing the budget, we didn't have the actual numbers, we were doing our forecasted numbers, and they're paid on actual for the prior year, not forecasted for the prior year.
Do you see that as creating an issue for you, or was?
No, I wouldn't say it's an issue, Scott. I mean, the increase in expense is more than offset by the increase in revenues. So the district is still net to the better because of it.
Okay, thank you.
Mr. Chairman, any other questions?
Any other questions from anyone on the committee? Okay, great.
I guess.
Oh, go ahead.
I guess one other question. So in the future, you're going to start showing, or I'll ask it this way. Will we start seeing projections of spending on the capital project?
Yes, Scott, and thanks for bringing that up. There will be exhibits moving forward that show the amount of debt proceeds the district holds for construction, along with funds drawn down to date and projected draws moving forward, so that the committee and ultimately the board has a better understanding of what our cash position is relative to that project.
Okay, thank you very much.
Okay, great. Anybody else? If not, we will now turn it over to Wendy Unger from Baker Tilly to go through our audit report.
So Wendy, thank you for joining us today. She's been working with me and Kyle and the rest of our finance group here really since March to get the financials to the place where they are today. I feel like they're generally consistent with what we've been reporting to the board for the past 12 months. So hopefully there won't be any surprises to this committee today. But before Wendy gets into her presentation, I think Marty just wants to make a comment here on one of the subsequent events that we've identified as part of the financial report.
Thank you, Steve. There are two subsequent events that, if you haven't reviewed it already, Wendy will get to later on in the document. One is Steve's already talked about, was the Emma issue. The other is that in discussions with Steve and Kyle a couple of weeks ago, we were talking about the expansion project and how we are closing in on issuing the final bid packet that goes at the end of June, early part of June. And by the latter part of June, we should have a pretty reasonable handle on where our expenses lie. I hope you can all appreciate, because of supply chain and inflation and cost of goods, we've seen expenses rise, and throughout the past 2 years, we've been monitoring those expenses, value engineering the project, finding creative ways, working with subcontractors to give us alternative ways to do different aspects of the project that, even without cost concerns, would help us reduce costs. We've been managing costs consistently. However, as we're getting closer to reaching the end of identifying what the hard costs will be, I wanted to make you aware, and the full board next week, that in the next couple of months, we're going to have a clear understanding of what the delta truly is between, if there is, between the project budget and what we anticipate the project to cost, assuming we don't eliminate any major components that we've been that's been integrated to the project. This is not a red flag. It's more of a notice that should this come about in August, you will have at least heard that there may be something brought forward to the board. When Steve and I came to that conclusion 2-3 weeks ago, I mentioned it to Wendy, and Wendy felt that even though it doesn't impact 21, it is certainly worth a mention. So we always try and be forthright and put things on the table so there's no surprises. It's in Wendy's document. We're not trying to run from it. It's just a matter of a heads up that may be more to come.
On that point, so I assume construction costs are not locked in.
We haven't gotten to that point yet. We're still waiting for all.
What's the order of magnitude of this last bid package? Are you talking 50 million, 200 million? I'm just curious.
I'm sorry.
What's the order of magnitude of the final bid package?
25 million.
25. And we have an owner's rep, correct?
Oh, yeah.
What are they telling you about anticipated?
They're telling us right now that there's a delta between what we've got budgeted and what they think the final bid packet will mean as far as impacting costs.
And we have contingencies in place or no?
We have contingencies for some amount, but not for what we think might be the delta. And I don't have that hard number.
And what would be the
order of
plan
magnitude
to finance a cost overrun in essence?
There are a number of different plans we're pursuing. One is, what is the phasing of the project, and what's still a moving part that we can eliminate? So if we have to make significant value engineering cuts, where are they? Quite candidly, that's the third option of 3. The first option, which we've been pursuing for the past 3 to 6 months just to get ahead of the game, is seeking federal funding and federal grants that are out there. We submitted 3 weeks ago, Sarah, 19 different line items to be considered to get federal grant money for. That's the first priority in trying to obtain money from someone else. The second, we've been working with Baird and Morgan Stanley to see what capacity, if any, do we have to come to the board and seek additional bonding? That's the second option, to fill any shortfall that the federal grants may leave. The third being, we are in a position that if there were no funds available to do the full project as budgeted, we could complete the project. We could complete the project to the point that we can open on time and host events and run the business. Would it be the project that we had presented on March 6th of 2 years ago? Probably some things would be missing.
So you eliminate carpeting or something? Or no furniture?
Not that, there would be furniture, but there wouldn't be as much, and carpeting may not be able to, no, but you're absolutely right. You know, a lot of from day one, and this is gonna hit Greg like a 2x4, and I wish you hadn't even come in yet to hear this, but from day one, we have been presenting that one of the major components of this expansion was the modernization of the existing facility, so that there's a seamless integration between coming from the north building going to the south building. There's $25 million in expense in doing that. Do we have to do that to run the building? No, but
I got other places you can cut, don't worry. If it's gonna come to that, we'll have a discussion. Cause I would not be supporting of just ignoring and not doing that. That would be bad, that'd be a bad plan.
and Greg,
I know you don't want me here.
I am absolutely on board. The objective is to do the project as planned, as expected, as we've been discussing for 2 years. We believe we can accomplish that. Okay. I need to be forthright. I'm not gonna come in August and say, Jim, by the way, you've never done that, and not start now. It would have been easy to not bring it up, but we need, it's full disclosure.
No, I appreciate that.
We talked about it earlier this week, and that's, every option has to be put on the table, and that's why we talked about just letting everybody know where everything is. But that's probably low on the options, Greg, for sure, but it's gotta be an option.
Well, and look, I would understand,
Yeah.
I would understand not showing up as planned, but there's a balance between zero and everything.
And there's many things to evolve here, including federal grant money. including
We're not
other
there
things
yet, Greg, I assure
that
you.
are coming. But again, rather than, wait, where did this come from? It's the discussion beforehand, so everybody knows.
Because the gravity is gonna obviously move north, but as we all know, when you're giving tours and you're trying to sell, you don't wanna walk them down, because they're gonna go see the bigger, better hotel, which will be ours. And you're gonna wanna walk them down. You're not gonna wanna walk them down a junky hallway and say, "Oh, here, guess what? Here's what you're gonna see every day when you come over."
I will say it was very evident when we did the tours last spring of
February.
2021. Yeah, it was very evident where people didn't update or modernize the existing building that was there, and they just lugged on the new one, which was beautiful and nice, but the one that existed prior to, you could tell not much had been done. And I think that's where the thought, other than the push from the board to do that, make sure that it all is a seamless transition. It's still the goal, for sure.
And I maybe it was part of the earlier discussion, I didn't hear it, I don't know what's going on with room tax. And we're not back yet, but I mean, the rates in town are very strong. So it might be changing, to your point. First I thought, oh, finance more? Well, maybe there is gonna be more room, because there may be, the borrowing costs will be higher because interest rates are up, but the other side of that is, hotel rates are up.
And that's what Baird and Morgan Stanley are telling us, because not only the hotel rates up, but we also raised a half a point the county tax, which is helping us see even more improvement in our tax revenue. So, Greg, I knew option 3 was going to get the reaction it did, but in response to Bob's question, what are you looking at? We've shared these different options with Wendy. You were going to be thrilled and look back at today's date and go, thanks, Marty. My cardiologist was really happy you brought that up, but all's good.
I'm not even worried.
Wendy, why don't you take us?
Take the floor now, following that, included in your packets, you should have a copy of the presentation, which I believe will go up on the screen shortly. You should also have included in your packets a draft copy of the audited statements and also a draft copy of our reporting and insights document. Both of those documents are currently in draft form until approval by the board next week, at which time we will issue finals. The presentation that is included in your packet is a very high-level summary. I will use that document to walk through both of those other two documents. Please feel free to ask any questions as we go through. Happy to address those as they come up. So the agenda, going to talk through the objective of the audit and the opinion that we intend to issue. Going to go through some very high-level financial statement highlights. Also talk about the contents of the reporting and insights document, and then end the presentation with just an update on where we are at with the Levy agreed upon procedures work that we do for the district. So under the auditor's objective and opinion, this would be a couple pages into the slide, sorry. Yeah, next one, there you go. The objective of the audit was to render an opinion on the financial statements for Wisconsin Center District. We intend to issue a clean, unmodified opinion, highest level of assurance that you can obtain from us as your auditors. That clean, unmodified opinion means that the information contained within the audited statements is believed to be materially accurate, that all disclosures that are required to be included have been included, that generally accepted accounting principles have been adhered to, and that accounting principles have been consistently applied from year to year. There were no new governmental accounting standards or GASBs that were effective for the district for 2021. There will be a significant one for 2022, and I'll mention that towards the end of the presentation. The only other item I do want to mention included in the opinion, similar to what you've seen in 2019 and 2020, is an emphasis of matters paragraph regarding the going concern information that is contained within your statements. There is an extensive footnote, footnote 16, that includes an update on where that situation and the strategy surrounding that. So I just want to draw that to your attention. One last item, just quickly on the opinion. The opinion does look and feel a little different than what you've seen in the past. The format has changed. Just want to bring that to your attention. There was a new SAS that was applicable for 2021. So content is the same, just in a different order. Moving then into the high-level financial information. I've included 3 slides that highlight, one, the statement of net position, so the balance sheet for the organization. I've included an income statement, a changes of revenue, expenses, and changes in that position, and then a high-level summary of the cash flow. Instead of going slide by slide, really just going to comment on the activity of the district for 2021. I'm sure most of this information you are well aware of, but really going to hit the high points, and then, again, happy to answer any questions that you may have. When you look at the activity of the district for 2021, the district saw roughly a $17 million decrease in its cash position from 2020. Main reasons for that, although the district saw a nice uptick, as noted previously, in your tax revenue, both in room tax, food and beverage tax, car rental tax. Room tax was up roughly $15 million over the previous year. You also saw a savings in the Visit Milwaukee fee, because again, as was mentioned previously, that is following from 2020 activity. So that was down roughly $5 million over the previous year. Also during the year, significant construction work went on. $28 million was recorded as construction in progress as of the end of the year. Most of that had been paid for, roughly $22 million. So there's $7 million of an increase in your liabilities related to accounts payable for the various construction and related retainages that existed during the year. Keep in mind that although you added $28 million to your capital assets, you also had significant depreciation that is recorded in your income statement of roughly $18.8 million. During 2021, you also borrowed. You borrowed and paid down your 2013 bonds. That was roughly a little bit over $23 million that occurred during the year. You paid your normal and customary principal payments on your long-term obligations. That was a little bit over $6 million, so $29 million of bonds were paid down. So overall, when you look at your activity for the year, you saw a slight decrease in your asset categories, with the decrease in cash and the increase in your capital asset activities. Your liabilities also saw a increase, saw an increase related to the additional accounts payable that were recorded at year end. Remaining activity relatively consistent with previous years. You will note that in your statement of net position, you did see an increase in your net inflows. The main reason for that, you have unearned revenue included in that. So you've collected money in advance for future events that sits on your statement of net position until that revenue is recognized when the event occurs. So overall, when you look at your results of operation, you'll note that there was a decrease in net position of roughly 18.5 million. As you can see, when you look at that results of operation, operating revenues up. Concessions sales, commissions on concession sales up 1.4 million. Your other income category up 2.9 million. The largest contributing factor to that was the Van Gogh project. The profit from that event, that was 1.2 million that the district recognized. You also had some additional funding you received for unemployment compensation. That was over $500,000 of additional revenue. With the decrease in your Visit Milwaukee fees of 4.8 million and an increase in your tax revenue, again, an 18.5 million decrease in that position compared to a $30.8 million decrease last year. So saw improvement, but still going a decrease in the net position activity down to $144 million. Under the cash flow slide, again, as I started the presentation with, I noted a $17 million decrease or change in your net position. That compares to a very large increase in 2020, but keep in mind that was when your significant construction borrowing occurred. So a lot of debt activity in 2020 compared to 2021. But overall, you'll note that $17 million decrease is really associated with your construction money that moved out of your restricted cash into operations to be paid during the year. On the next slide, the reporting and insights document. This is the second document that we issue as part of the audit process. This document is also included in your packet in draft form. This document we utilize to communicate comments and recommendations that might come up as part of the audit process. We also utilize this to have our standard and customary communication that we need to have with those charged with governance, both the committee and the board. Just a couple items that I want to highlight out of that document. One, we continue to include a material weakness in the internal controls for the organization. During the audit process, we prepare the audited statements for the district. We become part of your control structure for a period of time. Also, as part of the audit process, we had material journal entries that were noted related to the construction activity that were found during the audit process. So we have included those. We also adjust your pension and OPEB activity, which is a normal journal entry that we do for the district on an annual basis. Other comments and recommendations, I started the presentation noting that there will be a new governmental accounting standard, or GASB, that will be effective for the district for 2022. That is GASB 87. It is the accounting for leases. So the organization will need to take a very detailed look at the various leases that the district has and then determine the proper accounting based on materiality. Really, the very simple explanation is leases will now be accounted for as a right to use asset and an obligation or a liability on your statement of net position. That is not how they are currently. They are just paid for on an annual basis, more or less as an operating lease. So really encourage management to start looking at those, detailing a list, inventorying the type of activities, whether it's space and also keep in mind this goes both directions. So this is you as a lessee and as a lessor. So really needing to take a look at all leases that exist, equipment, vehicles, whatever they may be, and really starting to put that together because that will be upon us sooner than any of us would like. This is a standard that's been out there for many years, and COVID allowed it to be pushed, and now unfortunately needs to be implemented. So that will be effective for your 2022 audit. Also, a portion of that report, as I mentioned, is our required communication. That is really a section where we share information that we need to share with you under our standards. We highlight that there is an appendix towards the back of the document that highlights the journal entries we did, but we also include in there the various estimates that are included within the district's financial statements, some significant estimates. If you consider depreciation, where I mentioned is 18 million, that's an estimate. Your pension, your OPEB activities, those are all based on estimation and actuarial evaluation. So again, we note those and call those out for your attention. But again, nothing else included in that section of the report that I need to draw your attention to. We've also included a copy of the management representation letter. That is the document that will be put on district letterhead at the end and signed by management representations that are made as part of the audit process. Again, nothing included in there that I need to draw your attention to that would be unusual or unexpected. The last item, before I switch very quickly to comment on the levy activity, just one item I wanted to note and keep in both the committees and management's mind is as you pursue additional federal or state funding for future programs or projects or whatever you may be utilizing them for, keep in mind the need for a potential uniform guidance audit or A133 or a single audit. All of those terms are relatively synonymous, but a couple of those are older terms. We did talk about that this year. The district did receive almost $1 million from the SBA program that Steve mentioned. Fortunately for the district, it crossed 2 years of expenditure, so it did not exceed the $750,000 threshold for requiring that type of compliance audit. But I again, just want to keep that in the back of your mind as you move forward with requesting additional funding. Not that it's a bad thing, it's just, again, an additional step in the audit process that is required. We also, because we live in Wisconsin, we also have to have a state single audit then. So you would be required to look at any state grants if you had any. So just wanted to remind everyone that that is a possibility as you move forward. Then the last item that I've included on.
Can I ask one question?
Sure.
On the levy thing, and that is, as it relates to the material weakness stuff, which I'm assuming it's like public corporations where you now have this material weakness disclosure you have to make. So,
Correct.
which sometimes it sounds material, but
right.
It's like, I've heard like, that's in every single public corporation statement. So I don't know like what the level of concern should be about having you guys prepare the financial statements, the annual financial statements. Where should we be on that, and what should we do? I know it says we should consider spending more money, but again, I know what you're writing.
And again, I think your comment about that is something that's included in all public reports. It's in most of our governmental reports also. Again, it comes down to, are you comfortable with the current situation, and do you want to spend additional funds? And that's really what it comes down to. When you look at it from a material standpoint, when we use that term materiality, another thing to keep in mind that as part of that comment, there is also the journal entries that come up as part of the audit process. Those were material. So, again.
Are we preparing the journal entries, or are you preparing the journal entries?
They were entries that were noted as part of the audit process. So we noted them, management ultimately determined the figures that relate to that. So there was an additional amount of accounts payable related to the construction project that was not originally booked. As part of the audit process, we noted that we thought there were some additional payables, and management worked through recording those.
That doesn't sound like a problem to me, like, you found something, we fixed it. Or is it? I don't know.
Well, again, it was something we found.
Okay.
It was something that we noted. So unfortunately, under the standards, we are required to bring that to your attention. Likewise, with the pension and OPEB adjustments that we've made for as long as we've been the auditors for the district. Those have been material for, yeah. So again, we do look at them from a qualitative and quantitative standpoint and believe them to be material. So again, making sure there's a process in place to evaluate that type of activity on an annual basis. I think after this year's audit process, I'm sure Steve and Kyle will do extensive review of those construction invoices. And a lot of it has to do with timing. all of that information isn't available when they're doing their year-end close. And
It wasn't, those pay apps were coming in as we were wrapping up our
Yeah.
engagement with you, and we were looking at dates from our primary contractor, but some of the dates from the subcontractors, deep within the packet, were from 2021 and not 2022. So there was just a reconciliation that happened between Baker Tilly and the district on that matter. It's now included as part of the financial statements.
so now on a go-forward basis, they know exactly
Yeah,
what they're looking for.
and at this point, that payable's already been cleared out.
Right.
As those
I was gonna
dates.
say, it'll change.
Yeah, it cleared
Right,
out.
but
all
as you
those
go through
things.
2022, at the end of 22,
Yep.
somebody's got to go through that same regiment to determine what is not recorded, because
That's right.
there's going to be something
Yeah.
because of the magnitude of the activity, and I would expect it at the end of 22 to be even larger.
It'll probably be bigger, yeah.
Yeah.
We had something similar with Fiserv
Exactly.
as well. We're recording
Exactly.
payables
So,
across the years.
so again, just making sure that the processes that are put in place address those issues on a go-forward basis is really what the comment is noting. Again, then lastly, the last slide, as part of the contract that we have with the district for audit services, we also do some agreed upon procedures work related to the contract you have with Levy. That has been a little bit of a difficult process. There's been some turnover in Levy, and we really have struggled the past couple years to get the information needed to be able to do that work. I believe we're close. I think we are close to having that information, so we have not even begun that portion of the agreed upon procedures process. Don't expect that to have any material impact. That is work that we do to evaluate the revenue and expenses of Levy and making sure that the district has received their proportionate share of that activity. Again, don't expect any changes, have never had any in the past. But again, until we get the information, we have yet to be able to determine that. So I believe last year that report got issued maybe September or October. We're hoping not to go to that late, but again, it'll depend on the condition of the records that we get from them. So just wanted to update the committee and the board on that also. Then on the very last page, I've included all of my contact information, my email. Please feel free to reach out. Happy to talk through any information included, the audit process. But at this point, I'd be happy to answer any other questions you may have.
Are there any questions for Wendy?
So I have one other question with regards to the construction account. And most of that appears to be held by a trustee.
Correct.
And are the investments also held by the trustee too? And how did you do a verification of that?
So the restricted cash related to construction, which is detailed out in your footnote, I believe is what you're referring to.
Yeah.
That is all held by US Bank, and we do a third-party confirmation of that data.
So then you determine, okay, so you do a third party, and how are they holding those investments?
So the investments are in several different components. There's a US Treasury piece, which is roughly 300 million.
Right.
I could probably turn to the footnote.
300.
300 million. The rest of it is in, I want to say, some deposits, some cash.
Money market.
Yep, some money market accounts, that type of activity. And again, anything that is held in US Treasuries, we test through a service that we utilize for valuation.
The funds aren't released, Scott, for the district to invest. US Bank invests those
them,
funds
correct.
on our behalf. And once those securities mature, they're placed back into our trust accounts, and then they either sit there to be spent on the construction project, or an evaluation takes place with Baird. Dave Erdman, who's on the line here, has been a part of those conversations as well, determining what the district is authorized to invest in without eroding any principal. and then what our cash needs are going to be for that project over the next 6 to 12 months. Then we come up with what's going to earn us the highest rate of return that keeps the investments as liquid as possible.
Okay. I think that's all the questions that I have regarding that. Well, the OPEB that you have is that based upon, is that only for a limited number of employees?
Yes. Yeah, there's a group of employees here at the district, Scott, that were grandfathered into a plan that frankly is no longer in place at the district. So that eventually will, our liability on that will continue to decrease as we move forward.
Okay. And the part that you don't have the with Levy yet, that separate report, could that have any impact on the financial statements that we're seeing today?
As I noted, I don't believe it should. We have never had any discrepancies in the past with that information and the recording of the district share. I also am not concerned that it would raise, even if there was a slight difference, that it would raise to a material level.
Okay. Okay, thank you very much.
Any other questions for Wendy? Okay, great. Thank you, Wendy.
You know, and I think, Mr. Chairman, typically
Yep.
at this meeting, we ask the committee to vote on recommending adoption by the full board of this audit report. Great.
I had one question for Steve.
Yep, go ahead. Aisha?
Steve, I was going to ask you, have you guys started working on this lease thing for GASB 87? It is, at least at the city, it is quite an undertaking.
Yeah, no, Kyle and I, our director of finance here, have had some preliminary discussions. Once we get past this audit, Aisha, and in the board meeting next week, our group is going to get together to start to evaluate the impact. If there's any information or best practices that you can share with us, we'd be happy to hear from you on that.
No, we have to lead like a whole citywide effort and have these whole multiple department meetings and everything. We're actually buying software, like a little software package, but we probably have a lot more than you guys might. I don't know.
And if I may just add, we do have some templates that you can utilize to accumulate the information and then be able to project out whether, how the lease will get treated. So if you'd like, I'd be happy to share that with you.
That'd be great. Yes, thank you.
Great. Anything else? And to your point, Steve, I think at this point, we just ask for a motion of endorsement from the committee as we go into the board meeting next week.
So
Do we have a second?
I'll second.
Great. All in favor of endorsing the plan or the audit? Aye. Aye.
Aye.
Any opposed? Great. All right. Thank you. And again, thank you, Wendy, for your report. Always well done and thorough. We appreciate that. Thank you. All right, Marty, move to the CEO report.
Thank you. I'm not going to go through the CEO report in detail. What I'm going to talk about next Friday, just give you an overview of the touch points. First, I would like to acknowledge David Erdman, who's joining us via Zoom. David notified the WCD staff earlier in the week after notifying his colleagues in Madison that he was, after decades of service to the state of Wisconsin, will be retiring. And I think the groan and dismay was obvious even to him in Madison. That's how we all took it. David has been and continues to be a terrific resource for us in helping us navigate financial issues that he's very well versed at through his time supporting DOA secretaries and the governor's office. And I've said many times how much we appreciate and respect him. I'm surprised Steve Marsh hasn't said this, but the why don't you refer to David as,
He's the district's trusted advisor,
us.
the one and only.
So hopefully he can still
No
serve,
offense,
and is
stay
willing
with
to
the
still serve as a trusted advisor to us, but not in an official capacity with the state. David, I'm sure that, I know this isn't Kavai, this isn't the farewell, but I'd be remiss if I didn't just share with this group how much we've appreciated working with you, the time you've given our organization.
Well, thanks, Marty, and thanks, board. Obviously the financings I have helped the district complete have been one of my very high successes and high points, especially the financing we did for the expansion project. So appreciate the opportunity to work with the Wisconsin Center District. And yes, I'm still at the Capital Finance Office in Wisconsin until July 1st, and looking forward to maybe helping address that other little problem that was discussed earlier. So good to see you all again, and thanks for those kind words, Marty.
More to come, David, more to come.
Thank you, David.
Thank you. A couple things that I'll be talking about next week, as I shared earlier before Wendy spoke, talking about where we are with any potential shortfall in the budget, and then the recommendation and how we will address that without impacting the quality of the project that we all want this to be. Go through an update on the sports booking, entertainment booking, where we are with PTG, meetings and conventions. Everything is really progressing nicely for the balance of 22 and moving into 23 with holds. I did send out a couple of weeks ago an announcement to the board that we had severed our relationship with our VP of HR. I'll have an update on where we are with that at the board meeting next week, an update on where we are with the process of working with the RNC and potentially hosting their convention. Steve Harms has been extremely busy working with Legends in trying to bring closure and get us really close to a goal line with a number of different entities. We're talking about convention center naming rights. Mike Abrams is going to give an update on the expansion, where we are with that project. And then something that we've talked about for years, Kimberly Kane from Kane Communications will be here next Friday, and will share with the board, as she did back in 19, the results of our employee engagement survey. We did the survey, as you remember, back in 18 to get a sense of where the organization was baseline as far as being connected with our staff. We had hoped to do a follow-up to that late 19, early 20. Because of COVID, we thought would not be the best to do. So I don't think we're at ground zero, but certainly going 2 years without being as busy as we had been back in fall of 18, it's not going to be as fair a comparison to where we are, where we were in 18, but it's enlightening, and I'm hopeful that you'll find the information both compelling as well as encouraging, that we are plotting a course and have made progress. Ways to go yet, but we have made progress with our staff. The change that we're making in HR will be integrally involved in the action. The next step for us, after having gone through the report with Kimberly, is to then a team of us, Sarah, Brian, the HR person, in looking at the information and identifying the opportunities where we need to make improvements, and then how best to do so that we're connecting with the staff and developing them, because at the end of the day, if they're developed, the organization develops. So that'll be our summer project that in September of this year we will share with the board what our next step is after having gone through and processed all the information from the employee engagement survey. So that's a sneak behind the curtain of what's to come next Friday, Mr. Chairman, and that concludes my outline overview.
Keeping us in suspense. Many thanks.
Well, I want you to come back and buy the seat.
Are there any questions for Marty from this committee as it pertains to finance or personnel items? Or Mr. Marsh? Okay, great. Last couple orders of business, just review of our board meeting for next week. The agenda was in the attached packet. Very similarly followed what we've done in the finance committee meeting here. We'll give a financial report. We will also have Wendy go through her audit report again. For the full board, Marty will give us the highly suspenseful CEO report with all the updates. Mike Abrams will give us an expansion update. And then Kimberly and King Communications will do the employee engagement survey results. So With that said, are there any questions?
Bill,
Yep, go ahead, Scott.
Will, do you need to add to the agenda the item regarding the, for the banking?
Yeah, that resolution will be added, Scott, as well as action needed by the board for adoption.
Okay,
And that will be part of it, or will be a separate item?
It'll be a separate agenda item.
So we'll put a separate agenda item on.
Yes.
Correct. Yeah. Thank you, Scott. Anything else? If not, Michael, I don't know if we've changed anything on our board dates. All the
No.
dates hold true and they're in your packet.
Yes.
With that said, I will ask for a motion to adjourn.
So moved.
Do we have a second?
Second.
Great. All in favor of adjournment, say aye.
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 Any opposed? Great. The May Finance and Personnel Committee meeting is adjourned.
Hope we see you, Aicha and Scott. Love to see you in person next Friday if you're available.
Yep,
Yep.
I will be. Have a great day. Have a great week.
Thank you.
Enjoy your day up in beautiful Madison, Scott. Bye, David.
Call. That's gotten goofy. You missed the first part of the finance. It was so fun today.
Really?
Mr. Grady Crosby,
Here, accounted for, by Key.
Representative Kaylin Haywood,
Here.
Senator LaTanya Johnson, Mr. James Cantor.
Here.
We have a quorum.
All right. Next order of business is discussion and approval of meeting minutes from the January Governance Committee meeting. Are there any questions or discussion of the meeting minutes from anyone on the committee?
Is Joe still on this committee?
He's not on board anymore.
Okay, I just need to be updated. Okay, cool, thanks.
With that, I would ask for a motion for approval.
So moved.
Do we have a second? Can I?
Technically, no, you need,
Cal, would you mind seconding the motion to approve the minutes?
Can he second the motion even though he wasn't on the board or on the governance then?
He's on the governance.
he can approve it.
He can.
Yeah, he can second it. But Representative Haywood, you're on mute.
I'll second.
Great.
Thank you.
All in favor, say aye.
Aye.
Aye. Any
Aye.
opposed? Great. With that, we'll turn it over to Steve for our financial update.
Thank you, Mr. Chairman, and good morning, everyone. Today, we're going to be reviewing the 2022 year-to-date financials, as well as where we expect to end the year with our first real full-blown forecast. But before we get into the numbers, a few updates. Number one, on April 29th, a memo was distributed to this committee as well as finance, informed them that the district filed a voluntary EMA notice as a result of the trustee improperly transferring funds from one trust account to another. As mentioned in the memo, no funds ever left the trust, and the error has since been corrected. The district received no feedback from the markets or bondholders as a result of this filing, and no further action is required by management or the trustee on this matter. Number two, we reviewed earlier today with the Finance Committee the 2021 audit report. Wendy Younger from Baker Tilly was here to present it. The story of the 21 financials is what Marty and I have been representing to the board for the past 12 months. It was a year of recovery. There were no significant audit findings, and Baker Tilly will plan to present an unmodified opinion on our 21 financials, which is the opinion we seek to get each year. So they will be at Friday's board meeting to present that to the full board. The Finance Committee did recommend full adoption by the board at that meeting. And lastly, there will be a resolution that the board votes on next Friday regarding check signing authority. The last time the board adopted a check signing resolution was in September of 2018. And really what management is simply seeking to do here is to replace as authorized check signer the VP of Sports and Entertainment, position no longer held at the district, with the position of Vice President and General Manager. This simply gives somebody else in the organization the right to sign checks. And again, that was reviewed with Finance Committee as well. No questions or edits to that resolution, and we'll vote on that next week. Okay, so we'll move on to 2022, and I'll try to keep this brief today. Page 5 of your packet is the year-to-date income statement with column IDs A, B, C, and D at the top. You'll see a comparison of the district's year-to-date financials through March compared to the year-to-date budget. Scrolling down to line 71, column C, you'll notice net income is better than budget by about $250,000. And I'm going to jump right back up to the top to line 29, net operating income. While we're seeing a net positive at the bottom, we are seeing a negative variance in net operating income. Some of this is a timing issue where we thought some events that we were going to realize in the first quarter are getting pushed back to later in the year. But we're also seeing the impact of rising operating costs. That's certainly evident in line 18, utilities, which is up almost 12% through March. It's also very present in line 4, food and beverage revenue, although perhaps less noticeable. You can see we're down about $95,000 in this category, approximately 15% through the first quarter. Gross food and beverage sales were actually higher than our budget number by about 10%, but Levy is seeing increasing pricing pressure on both labor and cost of goods sold. We're continuing to work with Levy, along with other third-party vendors, to control costs and minimize the reduction in profit margins. Moving down to tax revenues, you'll see through March we're better than budget by about $700,000 or 12%. That's line 35. The March numbers that are baked into this are an estimate based on budget, and we're hoping to have actual results sometime next week to share with the board. But through the first 2 months, we're better than budget by about 12%. Bucks District ticket surcharge revenue, line 39, is up relative to budget. Hosting the NCAA tournament in March with UW in the field helped drive that number up, as did strong family programming in February with the Disney on Ice events that were presented at Fiserv. Moving down to non-operating expenses, a lot of puts and takes in this category. As is typical this time of year, I want to draw your attention to Visit Milwaukee, line 50. You can see that we have a negative variance of about $250,000, and that the 22 expense is driven in large part by 21 tax revenues. When we set the budget in September of 21, we were still cautious on where the 2021 tax revenues would end up. As this committee knows, the fourth quarter really blew past our original projections, and that's causing the subsequent increase in the payment due visit. The next page of your packet, page 6, is our annual forecast compared to our annual budget. Again, looking down to line 71, you can see that we're expecting to beat our budget by about $570,000. And again, I'll go right back up to line 29, net operating income. We expect to close the year-to-date variance of a negative $652,000 from the previous page to end the year at a negative $192,000 by the end of the year. Part of this is driven by forecasted projections for the Beyond Monet event. That was an event that we did not budget for, but is occurring in our exhibit hall beginning in October. We've also included in our forecast a $500,000 grant that the district received in April through the SBA's Save Our Venues grant program, which is part of line 13. This was a supplemental award that the district was eligible for, and was in addition to the grant monies the district received through that same program last fiscal year. As for tax revenues, line 35, we're forecasting only a slight increase relative to budget, about 3% the rest of the way for the remainder of the year. We think that's probably a little conservative, but seems like the prudent forecast to make at this time. And non-operating expenses, again, the Visit Milwaukee variance, line 50, is going to continue to grow by year end to be just over $1 million. And again, that's a true up of the 21 tax revenues. There's certainly opportunity in this forecast to exceed budget even more than what we're currently projecting through event activity and tax revenues. And of course, at this time of year, there's always risk. And management will continue to monitor and adapt its plan moving forward. As for the cash exhibits, pages 8 and 9 of your packet today, page 8 is the unrestricted cash. Page 9 is the restricted cash. Both positions remain in relatively healthy state, and management has no concerns about its ability to meet its continuing debt or operational obligations over the next 12 months. Are there any questions on the financial report today?
So the paper is the more accurate than what we had in our board booklet, because I don't see the numbers matching up. Like,
is this on the Board Effect website that you're looking at? Okay. Oh, that's okay. So the document you had pulled up is
so the
page
2022 income statement budget. It's your page 6, and so you directed my attention to line 50.
I think you're looking at the page 7 of the document here. There you go, page 6. Yes. Here we go.
Okay, now that does. So then why is it? Okay.
Page 7, we didn't spend a lot of time on today. That's a comparison to prior year.
Okay, so I did something goofy. Okay, gotcha.
Well, one thing I failed to mention at the start of my report today pertaining to the audit. In the governance committee, we'll see this when they receive the financial statements later this week. As we worked with Wendy under Baker Tilly through the audit process, there were a few subsequent events that we deemed appropriate to report in our financial statements. I'm already just my commenting on one of those here. The first event was the EMA notice that this committee has all gotten a memo on and that we just talked about in the second.
Thank you. Yeah. Throughout the first year or two of the expansion, we have been working with the architects and construction management team to value engineer the project as we go along. Put out bid packs. Some of the subs come back and say, yes, you spec out a curtain wall to be this way. If you do it that way, you can save $2 million. So those type of ongoing cost monitoring measurements we've been doing on an ongoing basis. Shouldn't surprise you that we're seeing increasing costs because of supply chain and also demand. It's we had anticipated 3% per year inflationary growth, and we're seeing anywhere from 10 to 20% increases in goods and materials for the expansion. Steve and I have been tracking this for the past 2 years. About a month ago, in thinking about this coming board meeting as well as the next board meeting in August, we determined that we needed to bring to the attention of the board, which I will next week, an update on where we are in tracking the budget and what we think. Is there going to be a delta between what we've funded for the project versus what we think is really going to cost now to do it as we deem necessary? We are pursuing a number of different options to mitigate that delta. Not knowing what that number is yet. The final bid packet goes out June 5th, so we'll have the final responses and know what our costs are by the end of June. Anticipating the worst case scenario, which is they may exceed what our funding currently allows. There are 3 different scenarios we're pursuing, and I'll get into them next week. But we wanted to alert Wendy and Baker Tilly that this is happening for 22 and looking at 23. She felt that that was a subsequent event as it relates to looking at the audit. While there is no impact on 22's P&L, she does reference it in her document, which you'll see next week. I just didn't want you as a governance committee to be surprised if you get through the document and see what is the subsequent event about funding. I don't know what they're talking about. I don't think it's going to be nothing as far as a shortfall, but just want to give you a heads up now that come August, we'll have a better understanding of where we are. If there is a delta, what it is between existing funding and necessary funding. And we'll present to the board with what options we've looked at and which ones we recommend and seek the board to support.
Does anybody have any questions on that? I don't think it's a shock to anybody. We talked about it earlier this week, and I know the team has got a number of options on the table in prioritization, and I think we still want to move forward. There's some things we certainly don't want to keep sacred, like trying to make sure we update this portion of the building as well, the existing, and we talked about it like the last, in February or March of 2021 when we visited the existing convention centers across the country. You could tell where people had put money into the existing places. We want this to be as seamless as possible, but it's an option, right? And that just came out in the finance committee meetings. We talked through it. There's some federal sources of dollars that are available. The team has looked at and applied for to try to get, and there's some VE stuff that's an ongoing thing in any huge construction project. And I appreciate the team's updating us, being transparent with us on what's going on. We're still super excited about this, and honestly, I think if we hadn't had the fortitude of this board to approve it when we did, we'd probably be looking at a project that probably would never get off the ground. So we're still very bullish on everything, but there's always bumps in the road on these things.
We'll get through it. Just wanted you to know now so you're not surprised come August. More to come. You'll hear more about it on Friday next week.
That's it.
So on the financial side, yeah.
God, you got to get up north again, or what?
Next week.
That's next week. That's right. All right. Are there any questions on anything in particular from any of the other committee members?
This is general question in terms of, I know you already mentioned it, Steve, in terms of operating expenses and the increased cost of labor. Just wondering, kind of, what's the organization's vision towards that? Are you having a tough time getting people? Do you see those expenses in terms of salaries or incentives continuing to grow? You got a handle on that? Just kind of general state of labor.
Well, one of the things that we saw ripple through the first quarter of Levy's financials was the cost to supplement the labor that they couldn't get locally here. And some of the programming that we had on site here required bodies that just weren't available in Milwaukee, so they were busing people up from their properties in Chicago. That became quite expensive in terms of renting the bus, paying the people to sit on the bus to get here, paying the people to sit on the bus to go back, in addition to their time on site. So, Levy is working like crazy to develop and implement strategies that allow them to draw people from the Milwaukee area, not have to lay that out. It's something that Julio's our GM on site that he's been working with the regional VPs on.
Levy, all the food and beverage providers in the market are really strapped to get people. So it explains why all the restaurants aren't open during the day for lunch, because you just can't get manpower. As Steve referenced, the events that we had in the first quarter, we can't compromise service for the high-end catered events. It's just not acceptable. And to that point, Potawatomi, by example, hasn't even opened up their catering component because they don't have the staff for it. So we picked up some short-term business because Potawatomi is just out of that business, or at least had been early part of the first quarter and fourth quarter of last year. So that is the explanation for why our margins on the food and beverage side aren't as good as we had hoped, because we're paying people not just for their higher wage because they're coming from Chicago to work here, but then we're paying travel time on both sides, plus the cost of renting the bus. So we're still making money in the events, but I'd rather make a little than have to cancel the event or deliver an inferior product. On the guest services side, we're always recruiting, but we aren't experiencing. We're experiencing shortages that certainly cause us stress, but haven't caused us to be concerned about, can we execute the events safely. It's a matter of shifting positions to make sure that we've got the coverage we need while manning those positions that are most critical, especially life safety. I mean, that's something that we can't ever compromise. No.
But my guess would be it's going to be a pressure for the balance of the year for sure. On financial statements.
It's something that I'll talk about in a moment, but part of the employee engagement survey was to glean information. What are people looking for? It won't come as a surprise, I don't think, but people saying that one of the questions asked open-ended, what would make you like working here more? Higher salary, pay me a bonus. When you make money, we make money. All of these things are far from flippant. They're real issues, points of concern. So what we're going to be doing over the summer is looking at the employee engagement survey and seeing what are the most critical issues to the staff, and then what can we address them? How do we address them? What's going to cost us to address them? We'll be putting that plan together and presenting it to you in September, because the next step for us after going through next week, you're going to get the presentation of the executive summary of the employee engagement survey. So you'll be able to see where we've had success in 3 years and also where we still have opportunities for the future. But the next step for us is now to take this information, we'll be sharing with the employees on May 26th, and then develop the plan to implement in the fall to address as many of their concerns. One of the first meetings I had with Sarah when I came here in 18 was, I want us to be an employer of choice. How do we get there? And that's what really the part of this employee engagement survey is what aren't we doing right?
Yeah.
Because
and so it looks like some of the pressure still is just around finding bodies.
Yeah, yes.
And then lastly, and this may not necessarily, I don't know, it has some implications for governance, I guess, that came out of the audit, and I'm sure you guys, I don't know if you talked about it in the last meeting, but there was some notation on the audit report around us internally having the expertise on our accounting staff to know all of the government accounting procedures to be able to close out month-end statements, and it
Yeah,
was a conscious decision that we were going to continue to do that outsourced, and if you can provide a little bit more color
Yeah.
around that, that'd be great.
that's, and that was discussed in our last meeting. Greg Marcus brought that up to Wendy Younger, our audit partner. That's something that's noted every year during the audit process. Because we engage Baker Tilly to prepare the financial statements on our behalf, the very act of them doing that has to cause them to have to state that in their audit report. It's something that was done before Marty and I got here as a team. It's something that Wendy represented the finance committee, that this is very common in most of the audits she does for other government type entities. They just don't have, the government entities don't have the, as she knows, sort of the expertise to compile that 65-page book of statements in a reliable way. And quite frankly, me personally prefer Baker Tilly do this for us, because then it gives me and Kyle.
Obviously, Jim has an issue.
Yeah, right. It gives our own internal finance team an opportunity to review their work compared against our own internal work throughout the year. See where we're off. And really, we weren't off on much this year between the two of us.
No, that's good. That's cool. For some reason, I don't know why it stood out more to me this year in that statement than anything, but I don't know. Maybe if they can also note that it's a repeated practice or something like that would be cool, instead of looking like it's a one-off every time.
No, that's a good point.
It's every year.
We'll have Wendy note that.
Wendy literally said it last meeting. She goes, "Well, we just put it in every year. We do that for our governmental clients." So
It is alarming when you see the material condition or whatever the other word is. It's alarming.
Well, you wonder just why the conscious decision is made, not do that. And anyway, it makes perfect sense when you explain it, and you know that there's so much bureaucracy and red tape around government accounting standards anyway, and so it just makes sense. And to also know that it is a recurring practice and kind of embedded in the way that we've done business eases your mind from a governance standpoint as well. So I don't know what type of notation or color they can provide in the audit report to make that look like a non-anomaly. That would be cool, but
it's a good point. I think something we should bring up next week with Wendy, because it was just interesting.
Yep.
She does get very sensitive when questioned along these lines, questioning Baker Tilly's ability to disclaim. But we'll take it.
Just have Grady answer.
That's right. Exactly.
Yeah.
Sure, great.
Tilly Smilly.
I bet you her answer's the same.
Or you can too.
Oh, no.
I'll stand right behind you.
Right.
Way behind him.
No, because I know they know that people with non-accounting financial eyes are on these statements as well. So, make it a little friendly in some places where you can. That doesn't jeopardize your, audit report integrity.
Sure.
Right. Agreed. I don't think there's any disagreement.
Soften the concern.
Yeah, it's good feedback, Grady. Thank you.
Anything else for Steve? Thank you, Grady, for those questions. We're good? All right, Marty?
A couple things. First, I just want to make sure we have some new faces at the table. I want to make sure people in the room. We've got Brian Rakowski, who I've introduced as the Vice President General Manager. Kyle Graham is Director of Finance and has been partner in crime with Steve and Wendy Younger and her team in doing the audit. So we've asked Kyle to be here to answer any questions you might have about the audit. Steve would have no clue what the answers really are. So most of them, I'm trying to give you the benefit of the doubt.
Okay.
Also in the finance meeting, a surprise remote guest was David Erdman from the finance department of the state. David has been a real asset to the district for a couple of decades. He's been involved in working with us to get you to finance this expansion, the existing building. Certainly involved in the funding for the FISER forum, and was a trusted advisor to Steve Marsh and the rest of us for the financing of the current expansion. David was on, I think, just to listen to what the finance committee was going to talk about, be available for any questions. But also, he shared with us earlier this week, he's retiring from the state. And just so you're aware that if you have the opportunity, if David participate next week, to wish him well. It's a real loss to us. He will continue to be an advisor off the record or unofficially with us, but a real asset to our organization. As far as what I want to talk about next week, we have gotten official notice from Mayor Johnson that he has resigned from our board. Although he could have, even though he went from president of the Common Council, he could maintain his position since he was self-appointed as the president of the Common Council as mayor, but he's resigned, and Jose Perez, the new president of the Common Council, will be joining us starting next week. Representative Haywood has been asked, I guess, by Jim and me 4 times, and we finally, the other day, actually paid attention to his response.
You said, Jim, I've told you 3 times. We apologize for that.
So he is with us and joins us today and moving forward. As far as what I'm going to talk about next week, I'm not going to get into the details, just kind of give you an overview of what to expect. We've had a discussion already about the potential delta between budget and what we think the project's really going to cost. I'm going to get a little bit into that next week and share with you the different options we're already pursuing in anticipation that there may be something, there will be something more definitive come July. I'll go over the event activities, sports, entertainment, an update on how PTG is doing booking the theater since we entered into the agreement with them in March, meetings and conventions, how we're progressing with that. We do have a new hire that I will share next week, heading up our HR department, an update on where we are with the RNC and our communications and proposal to them. Give you an update on where we are with potential convention center naming rights partner that is progressing nicely. We don't have something, you know, when he left Johnson Controls, we were banking on Grady to get that closed for us, but you know, he left and conversations just went cold.
A little short.
Went to the Arctic Circle when he left. But we give you an update on that, and then Mike Abrams will talk about where we are with the expansion project as far as physically where we are. If you didn't have a chance when you were arriving, if you have the opportunity to go along 6th Street or down Kilbourne, you are not going to believe what the frick this place looks like. They finished putting up the west side construction crane, and when I was leaving last night, they started it 2 days ago, and I'm walking up, what is that? That's our property. It's a big city, big time looking crane. I got real excited about that.
So you still are.
I am. Wow. It is, we have 4 cranes on the building right now, and it looks awesome. We are cranking. We're going from 300 people on the job site, 30 people on the job site a month ago. We're going to have over 300 in the next 2 weeks. So this is, we're moving, baby.
We started pouring
moving.
We started pouring some concrete.
We started pouring concrete, yeah, 450 cubic yards of concrete, filling up the water vault.
No.
Water trap. It's a water trap. Storm water trap. So when the storm water and rain comes down, currently, without our project, it would go right into the city sewer system and overload it. We've got these 3 traps that the water goes into. Each one fills up so that we can gradually have the water runoff from our property enter into the city sewer system so that we don't overburden it and then cause them to put more unwanted water in the lake. And this is all part of one of the 3 pillars in this project: economic impact, DEI, and sustainability. Bam!
Did he hit all the right notes?
I'm like bursting.
I know you wrote all that.
I'm bursting with pride.
Okay.
Nailed it.
Okay.
All right.
Lastly, as I just mentioned it moments ago, Kimberly King, the president of King Communications, is going to come in and give you an executive summary of the findings from the employee engagement survey that ended in March, concluded in March. I would say high level, but what's encouraging is we have seen improvements in a lot of areas in comparison to the baseline we took back in 2018. So that's good. One of the things I'm really happy about is that while we had a high percentage of participation in 18, we surpassed that in 22. Like 62% of the people responded, which is unheard of for these types of surveys. And I think what's more important great to know, yeah, we did a good job, if we could raise that level. But we still have work to do, and what identified is what's important to the staff. And as I said, we're gonna look to adjust that over the summer, put together a plan, and then share with the board how we're gonna roll out and get our employees more engaged. And I think, Mr. Chairman, and members of this illustrious board, that concludes the highlights of the CEO report for next week.
Are there any questions for Marty on that? All right, thank you. Board agenda for next week, basically very similar we've run through. We will go through the financial report. Steve will do that again, and then Wendy will provide the audit report, which the Finance Committee did endorse today. We will have Marty's CEO report. There's a lot of things he's keeping us in suspense about in that little summary he just gave us there. So we're excited to get people to come back. And then Mike will give us an expansion update. Kimberly will give us the employment engagement survey. We will also add, I believe, the one other aspect to the agenda, Steve, about the approval.
The check signing resolution.
The check signing
That's right.
resolution, and that'll be simple.
We're also gonna have, it'll be on the agenda, we're asking Kirk to give an update on, and we probably have to go into closed session for this. There are a couple of legal matters that really involve the Bucks more than us, but we're included in that, so we're gonna want to give the board an update on that.
Great. So that will be a closed session. Are we voting on anything?
No. Mr. Chair?
Yeah.
In light of my first question this morning about Joel, his replacement, is she joining?
Correct. She's on the board.
Okay.
She is the DOA secretary, is on the board.
She'll be here next week.
Okay.
We have not made a determination yet exactly on the committee assignment. We wanted to behind on getting Kaylin on board here. So as far as who the next person is, I want to review it and just look at it. We are still one person. Well, we're now two people short. No, one person short still, right? On the overall board.
Two. Joanne Sabir's position.
Correct. And
San Filippo's position.
So we are two short on that grade. So I do think I would like to see who those people are that get appointed before we make any immediate. Mayor Johnson knows about the position, and we've had brief conversations. Obviously, he's very busy rolling into his new role as well. So in due time, I think. But we've been down a spot now, it seems like, on an ongoing basis for a while. We want to get a full board as we go into this. So once we get those two names, at least, we will make the determination of exactly who that person is. Any other questions? Future meeting dates, nothing's changed?
Nope.
That's quite an update, Michael. Thank you.
It hasn't. I mean, so our next board meeting is the 20th, and then our next committee meetings are in August.
August. Okay. All right, and anything else that anyone would like to see as a discussion item, please submit, and we will try to get it on the agenda as best we can. With that said, I would seek a motion to adjourn.
I would move that.
Second.
Second. All in favor of adjournment, please say aye.
Aye.
Aye. That's an aye. All in favor. Any opposed?
Nope.
All right, meeting is adjourned.
Representative Hayward, we'll see you
Thank
next
you.
week.
Thanks.
See you next week. Participating today, really appreciate it.
Appreciate it. Thank you. Welcome aboard to the illustrious, as Marty says.
Illustrious.